The AI revolution is unquestionably in full force. But think about a few decades back, how the dawn of the internet blew up into a dot-com bubble. We all know how that ended. So is the AI trend getting ahead of itself? Or do artificial intelligence stocks still have more room to run in this market cycle? According to a March Bank of America survey of fund managers, 40% believed AI stocks are in a bubble, 45% disagreed, and 15% didn't know yet. Wedbush Securities analyst Dan Ives is very sure of the market's major AI theme.
This is a fourth industrial revolution playing out. And I think over the last year and a half, many that were skeptical, when you start to see hundreds of billions of CapEx going toward AI, I think that's convinced many this is not a bubble. It's a 1995 moment, not a 1999 moment.
AKA when the internet began versus when the bubble burst. And for a quick history lesson, the dot-com bubble in the stock market burst in the late 1990s, following a surge of investments in internet companies, and then billions of dollars were lost in the market. The difference now, back in the 90s, many companies just added .com to the end of their name without any proof of revenue or fleshed out business models. Now artificial intelligence is getting big investments from tech leaders and proving to be a significant revenue driver. Wells Fargo analyst Samir Samana is questioning whether AI investments are actually paying off.
I think the question that's maybe out there that we don't have the answer for is, does it result in higher sales and profitability for the companies that are spending boatloads of money in getting semiconductors, getting supercomputers, accessing the data, crunching the data? If it's not moving the needle with respect to higher sales and higher profitability, what's it all for?
Also making AI's path forward unclear is how the investing world has fundamentally changed since the early aughts.
A lot smarter investors. Retail plays a big focus. Machines, algorithms, any word that could be a little negative, stocks will get taken down. So I kind of view it as a much more efficient market in terms of the way that things are navigated. Now, valuations, you could argue, have gone clearly above historical. But if you go back to .com, that was a mania.
But some qualities seem more constant than ever.
It's FOMU, so it's fear of material underperformance. Because nobody wants to miss out when the train is kind of leaving the station. I guess what we would tell folks is, look, if it truly has legs, you're not going to price all of AI and it's 5, 10, 20, 30 years, maybe longer worth of productivity and that impact on sales, that impact on profits. You're not going to price it in the next, 1, 3, 6 months. There will be times when it seems overdone. There will be times when there's a healthy dose of skepticism.
Ives adds, comparing the leaders of the dot-com era, Cisco, Dell, Microsoft, and Qualcomm, with the leaders of AI does not compare apples to apples from a financial perspective. He's carved out his own Mount Rushmore of AI CEOs. They include NVIDIA's Jensen Huang, Google's Sundar Pichai, Palantir's Alex Karp, and Advanced Micro Devices' Lisa Su.
I think Microsoft, when they talk about the AI CapEx Copilot, the massive acceleration they're seeing, seats that are doubling, tripling, as enterprises line up to go toward Copilot, go to Azure, and eventually go to AI deployments. Look at names like Palantir, where basically customers are knocking down the door trying to get into some of these pilots to see what the actual use cases could be as that gets deployed. You look at ServiceNow, and then of course it starts with Godfather of AI, Jensen, NVIDIA. That's the best barometer for what demand looks like. They essentially see demand fully sort of baked into the model going into late 2025.
How will the broader AI theme play out in the market? Ives says it's like putting together Rubik's Cubes and finding out how different sectors, from hardware to software, will fit in the puzzle.
Chips, hardware, does that lead to software? Microsoft shows you where the deployments are, Azure. It shows the use cases. Now, does that go to Palantir? Does that go to ServiceNow? Does it go to Salesforce? Does it go to Dell? It's putting together this puzzle. It's not always going to be smooth. You'll have speed bumps. Companies could have softer guidance.
A lot of these companies are all trying to produce the next latest and greatest with respect to either the semiconductor or the supercomputer or the other things that kind of go alongside that.
What can today's investors riding the AI revolution wave glean from when the dot-com bubble burst?
And these things kind of wax and wane. I would argue that when you're hearing a lot about them, it's usually something where not always, but usually it means expectations are running ahead of reality.
I'd say it's not getting too caught up with the near-term narrative and seeing forest through the trees. Two, if things structurally change, make sure that that's a reevaluation of the thesis and don't just continue. Don't just sit there on your sort of lounge chair saying it's now playing out, because next thing you know, around the corner, it could be a blind spot. And it's also trying to figure out, like, it's not putting on your sneakers, doing victory laps. It's about now being like, okay, that worked. What's next?
For Ives, it's only a matter of time before the mega-cap tech leaders hit $4 trillion market valuations. And he says the AI party is just getting started.
It's 9 p.m. in the AI party that goes to 4 a.m. Now, I'm not saying during that period, music doesn't stop. People think police are coming to the party. Like, we're going to go through periods. It's not 100% smooth. But my view is that if that party, bull market, I think next few years goes to 4 a.m., I get how others will look at this from the outside saying, oh, party looks great, oh, but it's going to end. It's going to end bad. So let them eat ice cream, read a book, go to their hotel room. We'll stay at the party, meet at 6 a.m. at the diner, and who had the better night.
For Investors Business Daily, I'm Meredith Heyman.